Hi, I'm tax attorney Anthony Parent from Parent & Parent Advisors at irsmedic.com. And today we're going to pull back the curtain on how Fortune 500 companies, the biggest players in the game, minimize their taxes. Spoiler alert, it's not just about loopholes, it's about strategy, psychology, and understanding how the IRS really works. Stick around to learn how the pros play this game, whether some of these tactics could help you or your business save big on taxes. So let's dive in. First, let's talk reality. The IRS isn't some all-seeing, all-knowing machine. It's a government agency with limited resources, overworked auditors, and a need to show results. Top tax attorneys know this. They understand that IRS examiners want easy wins, cases they can close quickly with a victory for their team. So they employ their knowledge to their advantage with a playbook most businesses never even consider. Here's the big secret. Fortune 500 companies often implement two different types of tax strategies. The first type is the real deal type of strategy, a well-researched, legally sound strategy designed to save millions in taxes. Think R&D tax credits, transfer pricing, or strategic depreciation schedules. The second, well, that type could be a decoy. It could be a shaky, aggressive strategy that's technically defensible but likely to raise a lot of eyebrows. These decoys are low dollar in impact, meaning they don't affect the company's bottom line much if they lose. So why do this? Well, it's simple. When the IRS audits, they see the decoy first. Company puts up a fight, debates it, drags it out, then just at the right moment, the company will concede the small, risky strategy. The IRS gets their win, the auditor looks good, and the case closes. Meanwhile, the big saving strategy, the one that really matters, often sails through with less scrutiny. It's like a magician's sleight of hand. Distract the IRS with one hand while the real trick happens with the other. Now, another tactic? Well, wearing the IRS out. Big firms know audits have deadlines. They'll flood examiners with documents, legal arguments, and complex data, making it harder for the IRS to really dig into the meaty stuff. Because the audit clock is ticking, the IRS is often ready just to settle to move on, and again, especially if they already got their win by knocking down the decoy. Look, this isn't about hiding anything or doing anything illegal. It's about playing the game within the rules, knowing the IRS's bandwidth is limited. But that is not all. Fortune 500 tax teams have a whole philosophy built around staying ahead of the IRS. Here are some other strategies they use straight from the playbook of the corporate elite. Now, of course, many of these things are out of the reach of most businesses or are simply inappropriate. First, global tax optimization. Big firms leverage international subsidiaries to shift profits to low tax jurisdictions. They use transfer pricing, setting prices for internal transactions to legally allocate income where taxes are lower. This is why you hear about companies with headquarters in places like Ireland or Bermuda. These strategies only work if you truly have worldwide business. So unfortunately, going international rarely has any tax benefits for small or even medium-sized businesses. It is not any type of magic wand, but there are key strategies you do want to employ if your business is already international. Second, these Fortune 500 firms lobby for tax code changes. You ever wonder why the tax code is so complicated? Well, one reason of many is that Fortune 500 firms just don't adapt to the tax code. They help to shape it. They employ armies of lobbyists to push for tax breaks, credits, or loopholes that will benefit their industries. Unfortunately, there is no meaningful lobby for smaller businesses, so it is really about finding which strategies the big guys lobbied for that will also help you. Third, maximizing deductions and credits. These firms don't miss one single opportunity, from energy credits to accelerated depreciation to employee benefit plans to captive insurance. They ensure every dollar is accounted for, and they invest a ton into accounting and legal work. For instance, Ford Motor Company invests $1.8 billion a year in lowering their taxes with an incredibly robust tax and accounting department. Fourth, proactive compliance. Here's a surprising one. Big firms often over-comply in certain areas. They file meticulous reports, disclose more than required, and will build goodwill with the IRS. Well, why? Well, because it makes them look like good citizens, so when audits happen, they're less likely to be targeted aggressively. Fifth, hiring the best. Fortune 500 companies don't skimp on talent. They hire ex-IRS auditors, former Treasury officials, and top tax attorneys who know the IRS's playbook. These insiders understand exactly how the agency thinks and where it is likely to back off. The problem for you is that finding a firm that focuses on regular businesses is a challenge. Experienced tax attorneys can easily command close to $1 million a year in compensation as tax counsel for a Fortune 500 company. Thankfully, working for a Fortune 500 company isn't for everyone, including me. Working for corporate America doesn't really thrill me with that much. Rather, my team enjoys helping entrepreneurial businesses reach their goals. So, now that you know how the biggest businesses on the planet pay less in taxes, here's the $1 million question. Can your business use these strategies? The answer is yes, but with a catch. The key difference? You need to scale these strategies to fit your business. That means working with experts who can tailor a plan without exposing you to unnecessary risk. That's where we come in. At Parent and Parent Advisors, we bring Fortune 500 level thinking to small and medium-sized businesses. We know how to structure your tax strategy to save you money while keeping you compliant. So whether you're facing an audit, setting up a new entity, or just want to pay less in taxes, we've got your back. Visit us at irsmedic.com or call today for a consultation. Don't let the IRS outsmart you. Let's beat them at their own game. Well, that's it for today's look at how the big dogs play the tax game. The big dogs make the big investments as they know their highest return on investment could be paying less in taxes. Go to irsmedic.com if you are looking for a tax team who gets it. This is Anthony Parent of IRS Medic. Thanks for watching, and if you know of a business owner in need of some real tax wisdom, please share this video with them.